What is up, everyone? And my name is Ryan, and you are watching Crypto Grinders. Crypto Grinders is a channel that is focused on educating the masses about investing and trading in cryptocurrencies and blockchain. So right now, I think the whole market is a little bit more alive because Bitcoin is actually kind of trending, moving upwards towards $4,000, as we covered that yesterday. And I think a lot of the cryptocurrencies in the space are enjoying this whole market momentum movement. But in today's episode, we will be covering investing in the next blockchain ecosystem. So the ecosystem is a very general word where it could be a blockchain company that is trying to establish an ecosystem, or multiple various blockchain companies coming together to form that ecosystem. But it really depends on what kind of business that this space has to offer at the moment. So there are usually quite an extensive array of a variety and an extensive array of businesses that are out there, or at least blockchain companies that are finding solutions for these industries. But before we cover all that, I think we want to do a quick market roundup or market update on the market cap and prices. So at the moment, you're seeing the whole market, as I mentioned yesterday, that we were actually just a few hours ago, that the market increased by 12 billion as of now, right? The market cap has increased by 12 billion. In the past 24 hours, we have a total of 33.4 billion, and BTC dominance stands at 51.8. So Bitcoin moving up pretty nicely, and seems to be sustaining at 3,900, occasionally having quite a bit of resistance at that level. So it will be yet to be determined as the day goes on. Right now we have EOS looking pretty nice as well at 368, increased almost 20%, more than 20% as of today, in the past 24 hours. Then we have Ethereum, that surprisingly has been doing pretty well ever since it consolidated at the $120 mark, and now pushing up towards 150. I think there's going to be quite a bit of resistance at this point as well. Usually we have round numbers as the resistance points. 150 would be one of those marks. Then you have Litecoin. Litecoin is doing pretty well for itself ever since it launched. I think it mentioned that there was going to be more adoption coming on for Litecoin, and like I said, $50 is also going to be one of the resistance points for Litecoin. I honestly don't see the market really pushing up that much, because usually when it comes down to the fact that most cryptocurrencies have enjoyed a 10% increase, especially if you're talking about if Bitcoin is going to see a 10% increase, right? That is kind of like the cap for now. And having said that, the market cap actually was about 120 billion for quite a bit of time. So for it to add 13 billion in a span of less than 24 hours, it's already quite a bit of money pouring into the market. So if you are currently in positions, naturally I think most of you would have already done your take profits, but those who are investors, we are still a long way to go from the all-time highs. So naturally, that's why this particular episode we are going to be covering the ecosystems, because I think ecosystems are one of the most powerful things to give you a very big bird's eye view of how this whole space is starting to develop, and from then you can probably cherry pick what is suitable for you and your portfolio. Okay, so right now we want to cover the blockchain ecosystem, and I think I want to credit Sergey Vasin. This article, it was actually written back in June 28th of June 2018, right? And I don't think you need to keep having the latest articles because the ecosystem is just always updating and growing. So as the space matures, you can see new articles, and then people put in the various blockchain and cryptocurrency projects that they are familiar with. But let's just start at the core. So if you know that if you know everything starts off with blockchain, right? So of course we have the Bitcoin network, Ethereum, you have Waves, you have Neo, you have Phenom, Ripple, Hyperledger, Tendermint. So you start off either as, so it boils down to boils down to whether you're public or private chain, right? So public chains obviously are open source. You can have enterprises, companies, small companies, anybody can build on it. That's the beauty of a public chain. Whereas on a private chain, you are very focused on having your transactions move relatively quickly on the network, and only a few nodes will exist. Now, the reason why that is so, you are only focused on the transactions and you want to maintain a certain level of control, whereas public, it's a little bit more like I said, it's about being decentralized at the end of the day. When you talk about blockchain, usually you focus on decentralization, and the more nodes that are out there, naturally it's harder to attack the network, and it's obviously slower transaction wise. It may not be as quick. There can be certain complications that are not very favorable depending on what kind of use case you're focusing on. The next circle, as you can see, will be the cryptocurrencies, data storage, distributed computing, and middleware services. So you have quite a bit of popular names out there. So like cryptocurrencies obviously falls in that category. So although Bitcoin and Ethereum are in the blockchain space, Ripple as well, but you notice that they also have their own native currency. In this case, Litecoin, Bitcoin, Ethereum, we are familiar with. Then we have popular names like Decred, Bitcoin Cash. Then you have the privacy coins or privacy currencies like Monero, Verge, Dash, and Zcash. Then we have asset-backed. So asset-backed is something that was introduced very much later in 2017, right, if I remember correctly, where USD Tether was one of the very first so-called asset-backed stable coins, cryptocurrencies as we know today. Why is it called asset-backed? Well, every single USD Tether is backed by $1, and naturally there should be some level of compliance or regulatory regulations around, not regulations, sorry, there should be at least some accountability of whether or not when a company claims that every $1 is going to back one USD Tether, there should be some level of transparency, accounting, and auditing to back that up. So after that, there has been more stable coins that have been popping up in 2018, like Gemini Dollar, True USD or TUSD. You have PEX. So there's quite an array of stable coins, and obviously of late you also have a JP Morgan coin. Who knows what other centralized coins or governments are going to be launching coins. Then you have Venezuela launching their own Petro coin as well, backed by oil. Yeah, so you have that. Then you have the data storage space, where pretty straightforward, right? Data storage just means that you are just either a Dropbox kind of thing, or you're helping other people store their data, right? Whether it comes to photos, anything that is, any kind of file, any kind of data, you are gonna have to you are able to use either all these data storage solutions at the moment. So pretty self-explanatory. I don't think I have to go too much into that. Now, distributed computing, where you have Sonam and Golem, right? Golem is a project that has been around for a very long time, and it just focuses on sharing your computing power, or sharing your either your processing power, or it could also be sharing your storage. So it depends on how this function is going to be used. I would say that it can be something that is going to be popular in the future, because sometimes we don't use the full capabilities of our computer. We love buying you know, I mean, especially if you're a gamer or you're someone who is a graphic designer or whatnot. If you are someone who does all these things, right? And actually, as gamers, you usually use quite a bit of your processing power. But when you're not gaming, right, or you're not streaming, or you're not a streamer or whatever, what happens to the power then? So the idea or the concept behind it is you can rent that out, and you are going to be able to earn that particular token for you renting out your computing power. It can be your graphics, you know, power, and or storage or whatever. It really depends on what's the business model. So this is how it works. It's under the distributed computing. Then you have the mining, where the miners are focused on mining can be, okay, obviously they can be manufacturers. So in Bitmain's case, they are manufacturers. So they manufacture all the ASIC miners, or application specific integrated circuits, where it focuses only on mining Bitcoin, or mining Litecoin, or mining Ethereum. It's usually ASIC comes into play only when the network is pretty large and requires a lot of terahashes, right? So that's how and miners obviously serve a purpose of validating transactions on the network, which is very, very important. And also they get a reward for validating those for not validating transactions. They earn from validating transactions as well, which is called a mining fee, right? Because they are living on the power 24/7, and obviously they have to maintain a warehouse, you know, with cooling systems, or either natural or man-made. And obviously they have to have staff and whatnot. And the mining operation is never cheap. It's usually into the multi millions to even $1 billion into the $1 billion business, because there also has to be a dedication of electricity, whether is it free, cheaply attained, or expensive. On right now, I think when you talk about mining, it's not as friendly as it was, because right now the networks are really huge, and obviously miners want to only dedicate their mining power, the mining power and electricity, to the most safe chains, or at least chains that are going to last quite a while. You don't want to speculate and waste your time mining a cryptocurrency that may not survive or have any value, future value, right? So that would just be silly, and it's very costly for you, because you have a monthly cost at the end of every month, whether is it to pay the salary of your staff, rental, electricity, all these things, right, are a monthly cost, and naturally you don't want to jeopardize that or risk too much. Okay, so naturally you have Slush Pool, Bitfury, Npool, Bitmain, BTC.com, Genesis Mining. These are under the mining sector. Then you have the Internet of Things, which is basically, as it says, Internet of Things, right? Where they focus on like smart homes, smart cars, and then you're able to interconnect devices to the internet. So that's Internet of Things. So you have a very popular one like IOTA. I think I've heard of Slockit before. I've not heard of the others, Filament, and I think what's the other one? Uberg. Yeah, so there's that. Now, middleware services. This part is there are multiple layers that a blockchain or a blockchain company falls under. So this is the protocols, right? And protocols are part of infrastructure, where you can create layers that can either be built. Usually they're built on a blockchain first, right? That's the first layer. From then you have the middleware layers, and then from then the surface layer, which is where application layer, where people actually use, and well, that's probably the user interface part. So there are a few layers. So what Ethereum, Stellar, well, Ethereum Classic, when it had Quantum, Icon, or Cardano, Tron, all are trying to build that layer where it interacts with the user, and from then the user shouldn't need to know too much about what's happening underneath, and it works very, very seamlessly. So all these projects are focused on that. Then we come to the outer outer circle right now, where you have, okay, let's cover the ones that people understand first, which is the exchanges and trading. That's pretty straightforward. There are now quite a number. So you have the centralized and the decentralized exchanges, and naturally exchanges are very unique in themselves. They are considered having their own ecosystems at times, and they could actually offer quite an array of products and services as well. For example, if you are part of Huobi, right, or if you use Huobi, you will be able to see that they have the derivatives market, they have the OTC market. Obviously, they have digital crypto to crypto trading, and at the same time, they are having mining pools, which is the Huobi token, where they are trying to create their own chain, and from then that chain will be pretty much compliant to whatever regulatory requirements, and then from then it helps projects to be more transparent to the users, and also it helps the projects to kind of build on Huobi chain. So that's one thing, and I think Binance is going to do the same. The rest of the other exchanges either function very simply. Okay, so Shapeshift is more of a swap, where you just like whatever cryptocurrency that you want, you just click, you put it in, if you have that in your wallet, you just swap it for another. So it's quite straightforward. There will be a price that is indicated by Shapeshift. I'm not sure how competitive. I haven't used Shapeshift in a while, but yeah, that's how it worked. So the rest are all crypto to fiat. So I think more or less people who are interested to buy cryptocurrencies with their existing fiat, whether is it their US dollars, Canadian dollars, or whatever, they can use the crypto to fiat. And it's very simple. There usually isn't much. There is an order book, but you can't exactly place an order. So that's the part where it's a little bit frustrating. I think only Gemini allows that. I'm not sure whether Bitstamp uses that, but yes. So most exchanges are like that. They function in such a manner, and of course they are located in various demographics. Then you have the part where you have wallets, right? So wallets, they are cold wallets, and then there are hot wallets. Okay, and then there are desktop wallets as well. So you have your Exodus, which is a desktop wallet. BitGo is more on cold storage, and they are one of the leading securities solutions out there, or at least secure solutions out there for the crypto space. Then Ledger, we're familiar with that little thumb drive looking thing, Ledger, and they have of course other higher end products where you have screens and whatnot for people to actually see their cryptocurrencies. The My Ether wallet is basically like your desktop where you connect your Ledger or your hardware wallet or your Jepsen file, and then from then you're able to see and connect and even buy and participate in ICOs. That's how everyone used to participate with the My Ether wallet. Then you have wallet storage solutions, right? So all these things are there. Then you have DevTech, AdTech, prediction markets, utilities, insurance. You have integrity, which is obviously to focus on validation on whether or not this particular document is legit. So you have Civic, Uport, Mysterium. I didn't know Mysterium does that, by the way, but yeah, okay. Then you have Factum. Yeah, so you have quite a number of projects. Legal, okay, so legal will be Aragon, Stampery. I think legal, okay, no, that's accounting and auditing. No, I was thinking of another project, but that's accounting and auditing. Then you have GovTech, right? GovTech, yeah. So yeah, a lot of, yeah, as you can see, then of course we have the financial services, and last but not least, you have the STO platform, right? And then the outer layer would be everything and everything else, right? Products and services. So you have ATM, asset management. You have the publications, Cointelegraph, CoinGecko, analytics and resources, right? CoinCap, TradingView, yeah, so all this, right? Yeah, so this falls under and social networks, of course. Yeah, social networks is pretty important. Whether or not it actually takes off, all these things are yet to be determined, right? So guys, you see, so as you can see, it's very extensive, it's very vast. There's a lot of projects out there for you to take a look at. It's a lot of research that you need to do. So I think my personal approach as an investor, right, is to focus on the industry that you are the most familiar with. It is not. You should not invest in an industry that you're unfamiliar with, because when you read the white paper, you can't understand what's the objective or the business model immediately. You can't you can't really relate if you're not in healthcare and I'm from finance, right? And if you were to invest, for example, in the healthcare industry, it's not as simple as, oh, everybody needs healthcare, and therefore I'm going to be investing in it. Or I like the way that the model functions, and it seems pretty straightforward. Let's invest in it. Don't approach it in such a manner, right? I think I would never approach something in such a manner. Anyway, this is non-financial advice, and I'm just sharing my personal opinions on how I would pick my projects for my portfolio, right? So I'm definitely into the financial services sector and the exchange side of things, right? Because I pretty much do both investing and trading, so I kind of understand the ecosystem, and I've handled derivative products as well. So that's my forte. Whatever I would be investing in will be in those regions. But for you, maybe you are from the engineering sector, or you're maybe in the medical sector, or you're someone in operations, logistics, right? So if you're in operations, logistics, then maybe perhaps the supply chain sector would be more suited for you, because you would understand the upstream, downstream, and from then you will make a better decision, and at the same time you will know how to analyze the credentials of the individuals. Now, after you have determined the sector and industry that you plan to invest in, right? Obviously, you want to look at the team. I think there are very few people that bother to look at the team. So as the market starts to trend upwards and gradually come out from the bear market, people will start to wonder, what is all this about? So they would immediately have the same things, right? They would go to YouTube, they would go to Google, and find very little about the product other than the website and the white paper and the team page. So the team page is relatively important. Make the effort, right, to at least look through the CEO, CFO, CTO, CMO, whoever. CMOs are usually in charge of marketing, so I usually kind of put that as one of the not as important, because you need the core team to make sure that the whole platform runs, or the business runs smoothly. Okay, sometimes having a CMO too early just shows that you're only looking for marketing and looking for funding. I think that is a big, it's not a red flag. Okay, it's nothing wrong to go and find funding. Every project needs to look for funding at the beginning. But when you immediately bring on a CMO that early, I think it's extremely unnecessary, because you can actually outsource the marketing aspect when there's actual developments, or when you consistently have clients, right, that your internal team cannot function. It's all over the place. Then perhaps maybe you want to bring in a chief marketing officer. But other than that, that's a very irrelevant position in a company in such an early stage, especially if you're still considered a startup. So most projects, right, or most companies are a startup in this space. Yes, they have raised multi-million dollars to even sometimes close to $100 million, but they are still considered a startup. And the reality is that the value of cryptocurrency just moves up and down so quickly that from one moment they can feel like really well funded. The next thing, as we all have noticed in 2018, they are probably struggling, or maybe even requiring to look for new funding, right? And the reality of it is this: when you raised money, when the prices were at a certain price, right? Your previous investors in the previous round are definitely going to they're definitely going to hold you accountable to a certain extent, right? Not that there's going to be any pegging of price. I think if any project did that, they definitely have to make sure that their agreement is pretty solid, because you're going to have to transact with the prevalent market price in the future whenever there's any kind of exit strategy, trade sale or whatnot. These are things that the private investors will have to deal with. Now, as a crypto investor, where you're just buying off the exchange, you don't have to care too much about all these kind of things. You just have to kind of observe whether the project, the team, the company, as I mentioned, when you are talking about the team, you gotta look into their LinkedIn profile and see whether or not they are. You see, the LinkedIn profile is something that's very new and unique in the crypto space. And because LinkedIn is a professional, it's used as a professional platform, right? For professionals to connect. If you are a headhunter, you'll be looking for potential employees for your employer there on LinkedIn. So it's a very professional network. But I think there are people who know how to work around the system, right? They would have the 500 plus connections ready. They would start updating their LinkedIn profile. Prior to that, they never had a LinkedIn profile. So there are a few things that you can look at. Obviously, you want to at least on surface, right? I'm not even into the in-depth background checks yet, guys. So on surface, right, it may look like, okay, this guy used to be from here. He graduated from here. From then, he has this amount of certifications and experiences. From there, this individual is having the experience of doing this, and this from his previous companies. And if it matches, right, the current company that is being established, I think that's a plus point already, because he already has experience. Or better still, he has other businesses, right, whether related or non-related, but he is an entrepreneur himself. He has successfully either run the company and sold it, or still has a piece of equity in that company. So there are a few possibilities. And I think in this space, you need to have entrepreneurs. You cannot have someone who has a relatively very low or has no experience running a company. And I think when you say run a company, right, if he used to be at least the CEO of that company, and when I mean CEO, we're talking about at least 100 staff and above, right? When a company has less than 100 staff, right, to call yourself a CEO, and actually there's only 2 or 3 people or a handful of people, and you call yourself a CEO, I think it's a joke, right? So a lot of times, that's why I don't even consider myself a CEO. I just call myself a managing partner, because my company is basically not a huge company, so I don't call myself a CEO, right? So that's why you have to be very, very careful. Then you have the CFOs, where you have the chief financial officers that will help to manage the finances, and in hopes that they know how to manage the finances, because sometimes they take on the title, but they clearly know nuts about managing the finances of a company. And especially in the blockchain space, it's not that easy because of the fluctuations and volatility. You need to know how to network with the right partners the moment you've done your fundraising, and make sure that you have secured at least a good amount of you need to hedge out or cash out from your initial funding, right? And you need to find the right liquidity partners that can actually assist you to do that, right? So Cumberland is one of those solutions that allow cryptocurrency companies, or at least companies that have fulfilled their ICO, to cash out and, of course, lock in their funding for the next 2 years, 3 years, or however they see it, right? Because in the first place, when you talk about accountability, these companies obviously have to make sure that they are using the money for what they claim that they're going to be using the money for, which is obviously development, either marketing. But I think paying investors, especially after you've raised funds, should be last. So I'm very happy to say that nowadays projects are definitely a little bit more they have more integrity. Not that they're, I mean, you never know whether they're compliant, but at least they have more integrity to state that, okay, to the public, if we're doing a public round, we are going to be locking in the initial investors or our early investors for a good period of some time. So this is the part where it gets really in depth, and it's not entirely part of just the ecosystem, but I'm just sharing that right now when you're talking about investing, there are a lot of complexities, and honestly, I think this episode can run for 45 minutes to even an hour if I had everything to share. As I mentioned, I've been 3 years in the space. The ins and outs are pretty straightforward for me, and in fact, there are always various things that need to be shared. But I don't want to go in too deep into that. I think that should be another episode. But yes, right now, this is the ecosystem that you are seeing at the moment. And obviously, I think we are going to see more. Every single well-funded project, right, will want to start acquiring companies that are existing for various things, either for the licenses or for their technology to strengthen their existing position in the space. So as we know, Tron just recently bought BitTorrent. Whatever reason and function that it will serve in the future, I don't entirely know. But at the end of the day, when I say I don't entirely know, well, is because BitTorrent is actually free, right? It doesn't necessarily have to have a native token, and at the same time, because most people use BitTorrent for pirating software, movies, and music, I'm not entirely sure why Justin Sun would actually buy or acquire BitTorrent and only open up a can of worms. But hey, you know what? That's his money. He does what he likes, and like I said, I hope that you found this episode valuable to you, of me explaining about the various types of ecosystems, and potentially each blockchain company could very well actually establish their own ecosystem. And the more robust the ecosystem is, naturally the more valuable the network will be. So if you felt that this episode was helpful to you, to help you kind of decipher what things are all about, give this video a thumbs up, and don't forget to comment below which blockchain company do you feel is going to be the next established ecosystem. I'd like to hear from you, and don't forget to subscribe to the channel, guys, and I'll see you in the next live stream.